I've been trading for 8 years in the financial markets. 5 of them have been full-time trading. So it's probably safe to say that I know a thing or two about trading, profitability, and sustainability in the markets. So in this video, I promise to give you my transparent thoughts about some of the key things that I would think about to really push you to that next level. I promise these are going to be things that are not really talked about in the industry. These are things that are very much ingrained in my head that I've thought about as of today, because I was thinking about, what points to actually cover. These things just naturally came into my mind in the space of 5 minutes. So I figured that these are also things that people don't talk about at all, but are arguably some of the most important things that I've uncovered within my trading journey. So I'm going to talk about this. This is going to be crucial. Sit back, relax, go grab a coffee if you haven't already, and let's get into the video. So this is going to be raw. I'm just going to talk. I'm just going to share my thoughts. The first thing that I'd say is coming from a mindset of offense, defense. Most people think of trading in a black and white picture. Most people think in this probabilistic mindset, which is great to some degree. You think, let's call it, you have a 3-to-1 risk to reward strategy. You come into the markets, you think, right, if I can get a strike rate of 40-50%, I'm going to be profitable on that 3-to-1 strategy. Perfect, great, love that. That's great initially to think like that, because you want to follow that system, that edge that's going to take you into profitability. But you do reach a certain stage where you start thinking outside the box, you start thinking a little bit differently, and you start to uncover different layers within your trading journey, within your mind, and the way you perceive the markets and your journey. So one of those ways is offense, defense. The way that I look at it now, and have been for some time, is coming into a new period, call it a month, call it a quarter, call it a new year. The focus and the question becomes, how can I set myself up for success coming into this new period? And the answer is always start on the defense, stack confluence factors and trades that are low risk, high quality in your favor. Because the truth is, if you can stack those things on your favor and you're in line with, let's say, the daily narrative, the higher time frames, order flow, the trend, whatever you want to call it, you stack things in your favor quite nicely, which means it's easier for you to then reach a buffer, and you want to aim for a profit buffer of 10%. That's a clear gauge target. Now, if you held out to 3, 4, 5, 6 to 1s, this is where, in this period of essentially calibration, you could call it, this is where you want to be focused on paying yourself as much as you can. Any 2% trades, 1% trades, start to stack it, because they add up. There's no way in this period of time that I'm letting a 5% trade pull back to break even, because you don't have the affordability to do that. You want to have the goal and the focus and the mission of just paying yourself, getting it on the board. The quicker and the more effective you can get that 10%, the better, because you set yourself up for success for the rest of the year, the rest of the quarter, doing it that way. Once you've got to 10%, you now have the affordability to lean into being a bit more offensive. Imagine this, you're at break even, you take 3 losses, you feel how it's going to affect you from an emotional, a mental and physical capital standpoint. You feel it initially. Doesn't matter what edge you have, how you trust your edge, doesn't matter, I trust my edge. You take 3 losses on the bounce coming into a new period, you feel it. Now put yourself in a position where you're at 10% profit, you now take 3 losses, you're at 7% profit. Doesn't have the same dynamic, does it? Doesn't have the same weight to it. Things have changed, it's a completely different situation. So trading, remember, is situational. So putting yourself in a position where you have that profit buffer is huge, but you can't afford to be going all guns blazing, coming into a new period, just winging trades, trying to get a lot of profit on the board. You need to do it in a tactical manner, and this is how you do it. Once you get to a position where you can be a bit more offensive, then of course you can do different things to be a bit more aggressive. That doesn't mean you start, changing time frames, being super aggressive in the market. That's not what I'm saying. But what I'm saying is you can lean into things that are working. For example, if you're profitable, you got a good strike rate, there's nothing stopping you increasing the risk slightly if that's a path you want to do, and you've got the experience, the data, and the profitability and the numbers to back that up. That's something that I've done, something that I did a while ago. I no longer risk 1% on trades. There's a certain time and a place for that, but there's a certain time and a place to then lean into risk once you're ready to do so. So it's a case of that could be an avenue that you take. But I will say, if you do take that, make sure you're consistent with the risk. I wouldn't start alternating risk between trades. That's a recipe for disaster. If you start putting more weight on one trade because it's got higher probability, that could be the trade that loses. The valid trade that you then take, that you decrease the risk on, could then be the winning trade, and then you just upset the whole probability model. You don't want to be doing that. At least keep it consistent. The next thing is you could lean into a pair. In my case, pound yen. Love pound yen. Notice from the back end that that's where 60% of the profit comes from, because I've understand the characteristics of the pair very well. I've understood how to lean into risk on that pair and what works well for me. So I will double down on that pair. So being offensive means that I can now integrate, as well as day trades, intraday entries, swing trades into the mix, and then higher time frame entries as well. So it means that I can get the most out of the pair by understanding the concept of offense defense. But you have to start defensive to then be able to become offensive. Final word on this. A lot of you, this won't be relevant so far, so I was a bit wondering whether to even share this, to be honest, but there'll be a time and a place where you come back to this video and it'll be very helpful for you if you stick at trading long enough. So that's the first thing I want to talk about. The next thing is the importance of personal capital. Probably heard me talk about this a lot of times. I'm going to go into a bit more depth and a bit more of a different perspective. So I've seen a lot of people come and go in the space over the past 8 years. Thousands of traders. Everyone that I started with, apart from a handful of people, no longer at it. So many people gave up 3 feet from gold. So many people just chose a different career path, wanted to do something different. Don't blame them, that's absolutely fine. I've seen a lot of people come and go, especially in the past 5 years since the whole birth of prop firms. Now, the barrier for entry with traders now is so low. You could literally open up a prop firm challenge and call yourself a trader. You could stick it in your Instagram bio, trader. People are going to see that and perceive that in one way, right? That creates a problem because you haven't got the experience, you haven't been through certain lessons, you haven't got the characteristics, you haven't got the personality, you haven't got the emotional intelligence to deal with success as it comes. Now, there's so many lessons on personal capital that you will have that you will never have on funded capital. For example, you think about your own funds in a completely different way than you will with prop firm challenges. A lot of prop firms become this vehicle to milk the opportunity as much as you can. Therefore, you appreciate risk differently. You appreciate the opportunity different. There's a time limit on things. Even though there may not be time limit on challenges, you understand that in 5 years' time, prop firms might not be here. So there's a part of you that wants to leverage this opportunity. With personal capital, obviously you can lean into risk once you're ready, but overall it's about growing it and building that track record and over time, longer term thinking. That's what it's all about. So you think about your personal capital differently than you do with prop firms. Now with that comes thoughts like brokers. For example, you might be with one broker, it might be in the UK. You're protected if it's an FCA regulated up to 85k. If that 85k barrier is crossed, you have to think outside the box again because now you have a good problem on your hands. You're protected up to that certain amount, but as soon as you start scaling your capital past that, you have to be thinking about a second or third broker. Then pose the question of, do all your brokers need to be in one place, in one country? Could I have a broker in the UK, one in Oz, one in Europe? You start to think outside the box with this, and it opens up different windows and opportunities to set yourself up for success for the longer term. Because by doing that, you're now thinking strategically, you're now thinking tactically, which can set you up for success. So if something was to happen in the UK, it may not affect your broker in Oz, or it may not affect your broker in Europe. So you have to put yourself in a position where things are in your favor. You make the rules easy for you to win. That is key. The next thing I'll say, people aren't going to like this topic, but it's so true. Fluidity and the sixth sense. Now, people, believe it or not, it's the way we're wired. You want a checklist that I will give you that you can follow and that you will be successful. Now, although I can give you a checklist to follow and it'll be a profitable plan, etc., and all this kind of stuff, got everything available inside Envision. It's a case where if it was just as simple as just a checklist to follow, why are more people not successful? Ask yourself, why are more people not successful? If it was based on 100% mechanical strategy, that all you had to do is follow this list to be successful, why are most people not successful? And it's a case of, that's not how success works. You haven't built the personality traits, the characteristics, the financial thermostat, the emotional intelligence, the experience, the lessons. You haven't built the grit and determination along the way to become successful as an individual. So how can you just follow a checklist and expect to make millions of dollars? It's not going to happen. It may get you an initial bit of success if the edge has got a proven track record, but overall, it's not going to get you success in the long term in the markets. So people don't like the word discretion. I know it's thrown around a lot in the space. There's this whole debate behind mechanical strategies, discretionary. People just tend to swing from one side to the other. You've got the different pendulum swings from one to the next. People trying to sell from discretionary to then mechanical. It's just this whole battle going on. But the truth is, there's an element of both in it. Like, you could have a lot of it that's mechanics. 90% of it could be mechanics, pretty much like ours. But then you have that discernment level in there where you can think for yourself, and you use that experience, you use that fluidity in your approach to maximize the skill set. It's like anything. You could look at becoming an engineer or a joiner or a business owner or an architect or a financial advisor or whatever it may be. There's a layer of experience and skill set in there that you need to become successful. Pattern recognition, seeing things happen over and over and over again. Even in architecture, you learn how something operates, you learn systems, and it becomes second nature for you. It's the same thing in trading. So why are you trying to bypass that? Don't try and bypass that process. It's such a fascinating process, and you are doing yourself a disservice by trying to speed up that process. Honestly, the art of learning to become a trader and understanding all these little sections, although a lot of it you won't know how to do and you're just winging it along the way, that's how a lot of it is. You need to obviously surround yourself with people who are further ahead than yourself. That's how you get there quicker. But overall, a lot of trading and a lot of success is just being that guinea pig and figuring it out for yourself, or being surrounded by people who have already done it and copying them and actually learning from the fundamentals they lay in place. Success leaves clues, remember that. So overall, sixth sense in your trading is crucial, but you have to use this at a certain stage. I'm a big believer in the fact that you need a trading plan. You need all these rules in place. You need to be consciously competent with doing that, which means that you're performing the skill very successfully. You've got results to back it up. You've got the experience to back it up. And then you can lean into that offensive nature with your sixth sense. Essentially, traders reach a dynamic in the trading where they've been following a checklist for so long, then they reach this kind of barrier point where you essentially feel the second nature within you, that intuitional side growing, and you feel the need to either go down and follow your gut in the respect that you're not changing the rules or anything, but you're leaning into your skill set a lot more, or you continue with the mechanical strategy, the checklist. So you kind of have two paths you can follow. For me, I'm a big believer in using that discernment, but in the right way. There's a right recipe for it. It's like a scientist in the lab. It's not an exact science, but overall, you can use it in the right way, and it can really accelerate your success massively if you apply it properly. So that's key. The next thing I want to talk about is knowing your numbers. This is something that most people don't cover enough. I'm not sure why. Trading to some degree is a business. It's very different from other businesses in the respect that you don't have stock, you don't have a marketing team, you don't have all these kind of stuff. You don't, for a lot of things, you don't even have staff, but a lot of the same departments are still the same. You still have the admin side, which is your journaling. You still have, plus the numbers as well, tracking numbers. Then you also have the financial department. You're essentially the founder of your company, but you have to be the admin person. You have to also be the financial person. You have to become all these different roles within your own trading that it makes you think outside the box and grow in these different skill sets. Now, with that, knowing your numbers is super important. You can't get anywhere in terms of success without knowing where you are. It's a benchmark. It's a benchmark of knowing where you stand in order to progress to that next level. You obviously want to have one side of your trading, which is journaling, which is before and after screenshots, broker confirmation. You want to be tracking your psychology, your self-talk, trade management, trade analysis, why you even took the trade, would you do anything different, lessons learned, all this kind of stuff. That's one part of it. The next part is tracking your numbers, the P&L, strike rate, win rate, commission, swaps, all this kind of stuff on the back end as well, because that's what's really going to get you to that next level as well. There's two different aspects, but you bring them together and focus on propelling them both. You should be tracking your numbers at the end of every month. Don't just look at the broker statement. You should be tracking them manually or automatically and making sure that you understand where you're at in order to push forward coming into next month and next quarter. That's key. Last but not least, my voice is starting to go. This is probably one of the most important things. Don't gamify trading. People, I've done this so many times in the past, just through my own experience. I've seen people do it so many times as well. And it's just so clear for me now. But in the beginning, it wasn't. You've got to imagine, right? When you see MT4, you see MT5, you see these numbers in blue running, could be thousands of dollars on a prop firm challenge. It becomes a game. How can you not gamify trading? It becomes a game. All you're doing is getting into a trade. You're seeing these numbers running, but is it real? Unless you've got a payout and you're actually banking the profit, it's not real. It's just this facade. It's just this fugazi of that Wolf of Wall Street scene just popped up in my head.
Yeah, fugazi, it's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real.
Right.
All right. Right.
It's just this fugazi of gamifying trading. You see these numbers running, but it's not necessarily real. But the problem is, you could have a 100k challenge account, see 3,000, 5,000 running on a trade or trades. You then could have a $5,000 personal account, and the numbers don't make sense. So what you're used to seeing on the prop firm challenge is then hard to replicate on your personal, and you'll try and replicate it. And the problem is, you could be up 2, 3, 4% on that personal account, but because the numbers aren't the same as the prop firm challenge, it won't have the same weight, it won't have the same impact, which means you're less likely to pay yourself and follow your own system. So this is why it's important to not gamify trading. So a quick tip for you, a quick exercise that I want you to actually take into consideration, and I mentioned this years ago. I did a video in a car, it's about 2-3 years ago, and I mentioned this exact same thing, and it's rewarding yourself the profits. Once you get to a point where you're making decent money in the markets, pay yourself a portion of those profits. Withdraw it. Go and reward yourself with something. It doesn't have to be huge. It doesn't have to cost the earth. It could be very cheap. It could be, depends how much we're talking, but it could be go and pay for a trip away with you and your friends abroad. Go and stay in a hotel with your partner overnight with a spa. Go and take your partner, your friends, your family out for a nice restaurant dinner. Could be even something as simple as go and buy an ice cream from the shop. It doesn't have to cost a fortune. Or a coffee in the city. Whatever it may be. But what you're doing there is you're making it real for yourself. Trading is not this, fantasy anymore. You're making it real. You're making it real life because you've actually solidified those profits. And you can sit there with that coffee and think, well, I actually bought this with my trading. Might not seem like a lot, but trust me, that's where it all starts from. That's where the seed of faith comes from. Because then you start thinking, well, where am I going to be in a year? Where am I going to be in 5 years once this profit gets a lot more and my accounts get bigger and all this kind of stuff? You start imagining, and then the seed of belief starts growing in you, and you start believing it more and more, and it becomes this positive momentum cycle over time. But the problem is, if you don't do that, you just gamify trading. You end up being stuck in the same spot. So overall, make sure you pay yourself, and doing this regularly. Don't harm your account, of course. There's a line in the sand, but getting used to taking profits out of your trading, rewarding yourself and using it for better things in your life is going to help. Because at some point, if you want to use those profits in your trading to, buy a car or put towards investments to fuel other businesses, or buy a house or put a mortgage on a house, or whatever it may be, you have to start somewhere. So if that starting somewhere is buying a coffee for you in the city, let it be that. Then it's going to grow into hotel trips away or trips away with your friends. The scale grows. Your financial thermostat will just grow over time, but you have to start somewhere. So that's the video wrapped up. I think that's every point that I wanted to cover. And like I said, This is thinking outside the box. This is what most people don't think about. But the truth is, this will drastically improve your mindset when it comes to trading if you apply it properly. So overall, hope you enjoyed this video. I need a drink. I don't mean alcohol, but you know, maybe alcohol. I've got a dry mouth anyway, so I'm going to finish up this video, but hopefully you enjoyed that. See you in the next one, and until then, all the best in the markets. Follow the plan, follow the system, make sure you are protected, and just make sure you are doing things in a smart way. Don't come into January with all guns blazing. Just take it slow and steady, build those profits, build that buffer that I talked about, and set yourself up for success. See you in the next video.